Benjamin Graham's The Intelligent Investor is a book that everyone recommends, but nobody actually reads. It's almost always number one on any top 10 reading list for stocks and investing, and it's the book that famously introduced Warren Buffett to value investing. However, The Intelligent Investor is a difficult read. The writing style itself is fairly obtuse, and it's wordy, with Graham using a lot of passive voice and non-essential clauses. Additionally, The Intelligent Investor is technical. Like early entries in the Market Wizard series, there's a lot of good information here, but most of it is too complex for the average person. So if you're new to investing or want to learn more about picking stocks, don't read The Intelligent Investor. Rather, maybe try this instead. Learn about different industries. When you buy a stock, you're buying part of a business. Reading biographies about businesses and business people helps you better understand specific industries and operating methods. Avoid self-congratulatory autobiographies and focus on titles written from a historical or journalistic perspective. These are generally more informative, and they give you a wider view on how a particular field or industry functions. Because reading about different industries like pharmaceuticals, food, energy, entertainment, and so on will give you a good insight into how these fields actually operate. Plus, a lot of books on these subjects are fun and interesting reads. Some excellent titles that immediately come to mind are The Big Rich, about Texas and the oil industry; Merchants of Grain, the small handful of companies who control the world's food supply; and Dark Genius of Wall Street, Jay Gould, the original villain of high finance. It's an interesting read if you want to learn about Wall Street stock manipulation, shady dealings, and 1800s meme stock investments, in this case, railroads. And another thing you can do is read The Snowball and One Up on Wall Street. I mean, most people read or pretend to read The Intelligent Investor because they want to invest like Warren Buffett. However, there are actually several other books on Warren Buffett that are easier to understand and actually more informative. For starters, The Snowball is the most comprehensive of these. It's Warren Buffett's official biography, and it walks you through his entire life. I like this book a lot personally because it shows you Buffett as both an investor and as a person, and the author isn't afraid to showcase some of Buffett's more hypocritical angles. The Warren Buffett Way is also another good book. This one focuses entirely on how Buffett picks stocks, and one cool thing about this title is how it covers some obscure and unique Buffett investments that most people have never heard about. For example, Buffett's 2002 investment into Amazon. Lastly, one of the best beginner-friendly investment books of all time is actually written by the most successful investor in history, and that's One Up on Wall Street by Peter Lynch. This is a fantastic book that's pretty easy to understand, and it walks you through Peter Lynch's entire stock picking strategy. One Up on Wall Street explains virtually every aspect of investing that you might be curious about, and it does so in a way that's engaging. Despite being published decades ago, many of the stocks Lynch highlights here continue to beat the market. Companies like Automatic Data Processing and Waste Management, two of Lynch's favorites, are still outperforming the S&P 500 to this day. It's safe to say that I love this book and would highly recommend it to anyone interested in stock picking. And lastly, go out and look at what people are using. Exciting stocks and companies that are in the news are rarely good investments. In fact, Peter Lynch once said something along the lines of, "If I had to choose one stock not to buy, I'd pick the one everybody is talking about." A lot of meme stocks like Virgin Galactic or Carvana got tons of press while being fundamentally bad investments. Now their share prices are reflecting the reality of these firms. Meanwhile, there are still plenty of boring but good businesses that people buy from every day. McDonald's, for one, is not an exciting investment, and the company gets very little attention from the financial press. Yet, McDonald's restaurants are always crowded, allowing the business to consistently reward shareholders with exceptional stock performances and yearly dividend hikes. The best starting point for many investments is to simply go out and look at what products and services people actually use. Not all popular companies end up winners though, depending on back-end issues like share price valuations, corporate debt, and etc. but boots on the ground research will give you a good idea of which businesses are worth investigating further. Now, to be fair, I don't hate The Intelligent Investor, and I've actually read it cover to cover. However, I wouldn't recommend this book to anyone just starting out. It's dense, complicated, and often confusing. Additionally, a lot of the material, like the section on stock warrants and convertible bonds, isn't relevant to like 99% of readers. Your time is better spent with books like One Up on Wall Street or studying individual business sectors via biographies. You'll learn just as much useful information and have more fun in the process. Now, if you really want to know more about value investing and don't have time to read books, you should see this next video, where I teach you how to grow your money exponentially like Warren Buffett.